All right, welcome to today's video. We're going to cover the South Korean markets and how the Kospi index is driving and predicting really the Nasdaq's next move. There's a lot going on in South Korea, as you may know, and all of that is having a net effect of contagion in the US Nasdaq and other semi and memory names. So let's get into what happened this week and what I think is going to continue to happen until market conditions begin to normalize again. So before we get into all that, a little bit of housekeeping. This presentation is going to be the post-mortem of what happened. So I wrote a newsletter about this. I'll link it below this video. And I specifically pointed out all these risks that we're going to talk about today, and then specifically what the trade could be, as I spotted 40,000 option contracts on the put side, going for EWY strike $165, expiring 3 weeks from now, so July 17th. And then 22,000 contracts for the same date, targeting 90 strike. So what happened after I spotted that action last Friday, the EWY ETF went down roughly 12% from there. So obviously these lottery tickets have paid. I don't think we're done with the down move, but I did take profits on this trade idea. And essentially, I think there's more to come. This could be a small preview of everything that's happening in South Korea. Speaking of which, let's get into all of that. So there's one country's casino, which is South Korea, and it is now wired to the US AI trade. And I'm gonna run you through the setup. So over the past 6 months, the Kospi index ran over 200% higher, right? So the stock market in South Korea became larger than Taiwan, Germany, Canada, and India. Given that the size of the country and the size of GDP and the economic output that they have, and they really only have two industries there, it doesn't make sense for them to be bigger than Taiwan, where Taiwan Semiconductor is, Germany, where you have a lot of industrial names and chemicals and all that, and even Canada and India. I mean, these are powerhouses across the world. I don't see why South Korea should be bigger, right, as a stock market and all these, especially because it is driven by just two stocks. So that 200% rally that we saw under 6 months came from Samsung and SK Hynix, right? So the breadth and the representation of the economy just isn't there. And the fuel behind all of this rally is retail leverage. So there's about 40 trillion won, so roughly $26 billion of leverage bets funded by personal loans and people cashing in life insurance money. So, I mean, this isn't a healthy rally, right? It's not backed by fundamentals. It's not backed by normal market plumbing or mechanics. It's just everyday people taking out personal loans and cashing in life insurance money to buy the rally. So, as I pointed out, roughly 26 billion of margin loans is riding behind this rally. And the daily swings have now shown that leverage. As the Kospi, you may have seen it, is up 10% one day, down 10% the other. It's just crazy to be in that market. And the wire connecting South Korea to the US is that all of these margin loans in Korea are collateralized by roughly 600 billion of US equities. So the S&P, the Nasdaq, and what represents those indexes, so really Nvidia, Apple, Microsoft, and all the other memory names, are really the backstop for those loans. Meaning, if Korea gets margin called, they're going to have to be forced liquidated, and the margin collateral gets liquidated as well. So roughly 600 billion could go out the window if South Korea gets margin called, and there goes the S&P and the Nasdaq. So the trade that I'm starting to put on here, and I've already put on, is first the lottery tickets that have paid out already, the EWY puts and the Koru puts. But then I'm also targeting the other side of the trade, and we'll get into that in a minute, because for every $1 that goes long the semi and memory trade, there's probably 30 cents that goes short in a hedge for software names. So when all this unwinds, guess what? I think software wins. But we can get into that later as well. Now, let's look at what's driving the rally in Korea, right? So the entire country's rally has been repriced in a single quarter. So even less than 6 months, South Korea stock market went up by 200%, as I mentioned, driven by two stocks, Samsung, SK Hynix, and it is now bigger than India, Canada, Germany, and Taiwan at 5.2 trillion. So the market really added roughly three and a half trillion dollars of market cap in less than 6 months. Yeah, I don't see how that's reasonable at all. And especially when you have such bad breadth, right? So only two stocks in one industry, one sector, drove the South Korean rally. So you have Samsung, SK Hynix, both are DRAM memory names, and they supply the AI build out, which is the exact same trade as Nvidia, Micron, and other US semi names, right? So everything is driving behind or riding behind the AI demand that is starting to look a bit more fragile, right? Because the market is concentrated, it has no margin of error, it has no room for error, really, so no shock absorber. Both names are right on the same thesis, and any wobble in the AI trade, whether AI models fail to keep growing revenues or capex slows because of free cash flow issues or inflation or interest rates, then guess what? All these companies get pushed back into more realistic valuations. Then goes the Kospi and goes the Nasdaq. Now, the volatility due to this leverage is starting to show up in the Kospi. So the ATR, so average true range, used to be roughly between 1% and 1.5%. Then 3 weeks ago, when this all started, it went up to 2.6. Okay, that's still reasonable. And then 2 weeks ago, it went to 4.2. That's starting to be more like a turbulent time in the US. That's when in the US you start to worry about a sell-off or start buying dips on a sell-off, right? 1 week ago it was 6%, and then today is 8%. So we're at 8 times the normal historical volatility for the Kospi. That's leading to 8% days up and down, 10%, 12%. I mean, yesterday we saw a big move as well. That's not normal, guys. That's the market plumbing, the market mechanics starting to break because of all the leverage that is inherent in the underlying market. Now, since April, this is another worrying factor that I'm watching out for. The S&P, so the SPY ETF and then the EWY ETF for South Korea have been 90% correlated. This is not supposed to happen. I mean, economically, there is some correlation because the South Korean PMI manufacturing leads the US manufacturing PMI because of how much exposure we have to semiconductors and chips and electrical equipment. But the reason that the S&P and the Kospi are now 90% correlated is because the S&P is the AI trade. The S&P is all technologies, like roughly 45% AI names. So of course the PMI is correlated. The stock market shouldn't be because the S&P 500 should be diversified into 500 companies, right? Right now it isn't. So the fact that 90% correlations to South Korea are present worry me because that volatility could spill over into the US. And trust me, if we see 8% ATRs on the S&P, things could get ugly in a hurry. And we're starting to see some of that breaking. So the S&P is diverging from the VIX, and that usually ends up in a sell-off. So usually what you should see is the S&P rallying and the VIX crashing and vice versa. When you see the S&P rally with the VIX staying higher and not going lower, that is, again, the market plumbing, the market mechanics breaking. At the same time, when you see the S&P sell off and the VIX go up further than it has to, that is, again, a sort of dispersion trade going on, a sort of market plumbing breaking. And I think it's starting to happen, right? If you see the volatility in the Kospi and the correlations, that could lead to an amplified move. And I think markets are expecting that, which is why the plumbing has been broken between the S&P and the VIX. The dollar is another tale, guys. We just broke 100 and are trading roughly at 101. We closed in on 102 earlier in the week, but right now we're pulling back. What happens here is anytime the dollar goes above 100, that signals headwinds for liquidity. And remember, the liquidity right now is the most important factor for the AI trade, for capex, for memory, for semis, and again, liquidity affecting that trade is going to directly affect the Kospi, which directly affects the Nasdaq and the S&P. You can already see it in other assets like Bitcoin. So Bitcoin is heavily reliant on liquidity conditions. It's been in a bear market for the better part of a year. I think it's better and easier to get rid of Bitcoin than it is stocks, and stocks could be next, right? So the trigger could be in South Korea. The trigger could be onshore. Who knows, right? But there's a lot of things going on as a warning, and one of them is the sentiment, right? So you have in South Korea. I don't know if you noticed, but Jensen Huang, the CEO of NVIDIA, has been touring East Asia and Southeast Asia, and he's become a celebrity. So, I mean, I've seen pictures of Steve Jobs and Bill Gates walking through random crowds in the street, and nobody had the same effect as these crowds had on Jensen Huang. And that tells me that the retail crowd in South Korea has been betting their entire net worth in some cases on NVIDIA, on Micron, and all these memory names that have been going up because of NVIDIA. So, I mean, if you connect the dots to these people, Jensen Huang is sort of a god because he indirectly made the stocks that these people owned rally. And I don't just mean rally, I mean double, triple, quadruple in price. So, I mean, you've seen the pictures, you've seen the videos. Jensen is in South Korea, and he's pretty much surrounded by paparazzi and everyday people. And I don't know, I've never seen a tech CEO be as famous as he is from the retail crowd. So, again, that should be a tell as far as sentiment and speculation goes, which leads me into the record leverage that is now present in South Korea. So, again, roughly 40 trillion won in leverage bets, or $26 billion on the Kospi, through a new all-time high. Considering that in South Korea, the average monthly salary is $2,600, this is roughly 1 month per capita, right? So the 26 billion in the population is roughly 1 month worth of salaries at risk. So essentially what you're seeing is people are putting in their rent money, their full monthly salary at stake, taking out cash from life insurance policies, taking out personal loans to bet on this rally. Again, I don't know when or how that could be logical, but it's the same thing that's happened in the past. If you look at the 1980s lost decade in Japan with the property speculation, if you look at the great financial crisis in 2008, it was pretty much the same thing. I mean, people leveraged up to the hilt thinking that the assets they were buying could never go down. So, I don't know, a lot of similarities here in the scenario. Now, the record for the Kospi is on the surface. When you look underneath, the breadth is honestly the worst I've ever seen in the 15, 14 years I've been in the market. Only 4% of stocks have been going higher in the Kospi, while 32% of stocks have made 52-week lows. So, roughly 70 odd, 60 odd percentage of stocks have done nothing. 4% of them have hit all-time highs, and then 32% are hitting all-time lows. So, I mean, it's just bad, right? You have 95% of the Kospi being in tech and memory, essentially AI trades, and then the S&P is at 45%. So, of course, the contagion risk is not as high for the S&P. I'm thinking like a 10-15% drawdown, but definitely it is very, very high for the Kospi, given that it is 95% concentrated. Now, before I leave you with a few more facts, these are the figures I want you to take away and keep in mind as we move forward in the correlations between the US and South Korea. So we have the 200% rally in a quarter, bringing South Korea to a larger size than Taiwan, Germany, Canada, and India. This is happening under 6 months, right? So not normal repricing. Then we have the all-time high retail leverage, so roughly $26 billion in betting being taken from personal loans and life insurance money. Again, not something you want to be involved with. And then we have less than 5% breadth. Now, this is the part where the South Korean bet turns into a US. Now, this is the connection between the leverage that is happening in South Korea and the US stock market as a backstop, right? So you have roughly $600 billion being held in US equities by South Korean entities. According to the global collateral rule, you should have a 40% of these margin loans being held in collateral, right? So if you have 600 billion in collateral held in US equities, then that 40% rule would translate into a bet, a leveraged bet of $1.5 trillion in South Korea. So what happens when South Korean markets, as we've seen, 8x their ATR, their volatility, and the swings become high enough to margin call and force liquidate a lot of these players. Well, if that $1.5 trillion goes, then the 40% rule kicks in, and 600 billion of US equity collateral gets wiped out as well. That is exactly the risk that I'm watching out for, and exactly the reason why you saw EWY, Koru, and the Kospi crash yesterday, Wednesday, and right at the same time, you have Micron, you have Nvidia, you have Broadcom crash out by roughly 10%, right? What's even more interesting is that software stocks went up, right? So that's another topic we can get into, but I would suggest to watch out for that relationship moving forward. Now, this is the correlation that I was talking about. So again, the same process kicks in, volatility spikes. We have 8% ATRs already, forced liquidation. Then the $600 billion collateral goes, and the correlation kicks in. If we remain 90% correlated with the Kospi, and the Kospi gets forced liquidated, then I guess we're going to have a rough time in the S&P and the NASDAQ, and kick in a rotation out of the AI trade into more real economy names, into software, into other areas. And the epicenter of all this trade is NVIDIA circular financing. I wrote a deep dive on the aggressive accounting / fraud that's happening in the AI trade, all leaning in on the NVIDIA circular financing, right? So when you take into account that this is not just South Korea, this is Taiwan, this is Japan, this is the US semis, they're all leaning on the same story backed by NVIDIA, right? So NVIDIA is buying stakes, it's buying equity stakes in other companies involved in the AI supply chain. In fact, roughly 56% of NVIDIA's balance sheet is made up of marketable securities and investments, right? So more of NVIDIA is being made up by stuff that isn't NVIDIA. And all those equity stakes, all they're doing is pumping the demand side and pumping the numbers on the headline. And then South Korea joins in, Taiwan joins in, Japan joins in, and now the US, 40% of the market joined in. So what happens when NVIDIA, as it is right now, starts to lag the market, starts to lag other AI trades? I think the momentum slowing could bring it all down. And specifically, there's an IRS code when it comes to depreciation of data centers and chips that could kick in the next 6 to 9 months. And this catalyst would essentially halve all EPS being in the tech sector, and everybody that's involved in capex and data centers and chips could see their EPS cut in half. So when it happens, I ask you, what do you think happens to South Korea? What do you think happens to the US markets like the S&P and NASDAQ, right? And if we combine all that exposure with the S&P, Korea, Taiwan, and Japan, we have roughly $12 trillion riding behind this trade, which again, underlying earnings could get cut in half. So not looking pretty, guys. But the option markets was already betting on this. This is part of the newsletter, so I'm just gonna go back to the figures here. We had $90 puts command 22,000 contracts by July expiry, and then 165 strike. We had 40,000 contracts, and the potential effects are already being seen in the EWY and the Koru. It's down 12% since I posted that newsletter. Now, the effects that could be spilled over into the S&P, I'm not calling for a crash. I'm not calling for a full bear market until the evidence shows that it could be the case. But I am calling for a correction. I'm calling for a 10 to 15% correction in the S&P by the end of the summer, toward, let's just call it September, right, toward the last quarter of the year, uh, based on these exposures and based on these correlations. So we have the aggressive side of how to play this, and I've already played it out. If you're watching this now, then you are late to the trade and are late to the newsletter. So I suggest you check it out in the link below and subscribe. This is the EWY puts, right? So I bought both in the spread, got long the 165 strike, and then got short the 90 for a put spread, and that's worked out pretty nice. Now the conservative side is to rotate into what's breaking out on these red days. So as I mentioned earlier, we have memory and semi stocks crashing along with the Kospi, along with the S&P rotation, and all that money is going into software, is going into select hyperscalers. Like you saw Microsoft being in the green yesterday, you saw Apple in the green yesterday, you saw Adobe, Workday, most of the IGV software ETF was in the green, while Nvidia, Broadcom, Micron, and Korea were all crashing out. So again, this is part of the upside portfolio. We are overweight software. I was a big software bear last year, if you follow me on Twitter, where I called for shorts in CRM, Salesforce, and Intuit. And now I'm flipping the book. On being overweight software because it just makes sense, right? And we can get into a deep dive on software and Adobe. It's already written out in the newsletter. If you want to go check it out, I'll probably link it below for Adobe. But I think software is the one area that wins whether AI succeeds or not. Now, moving forward, these are the signposts that I will keep in mind. First is the EWY to the SPY peg. If that correlation doesn't break down, it means that the S&P hasn't rotated as it should, and that remains the contagion risk from South Korea. The VIX divergence between the S&P and the VIX index, I think is something we should watch out for. You could easily plot it in Thinkorswim or TradingView, have the SPY chart and then an RSI to the VIX and see how we're making lower highs as the S&P makes higher highs, right? So that shouldn't be the case. Now the dollar remaining above 100 is another headwind for liquidity, for interest rates, and for capex capacity that is going to keep fueling the memory and the semis trade. So if the dollar doesn't go back below 100, I think the capex could eventually slow, and the margin calls could start to kick in from Korea. Now, if those happen, then I would watch out for the forced liquidations in South Korea. So you would see more halt days in South Korea and bigger 8%, 10%, 12% down moves on the Kospi. Now, we do have the PMI and NFP this week. The PMI and NFP should be out already by the time you watch this, but I did make a PMI breakdown on the newsletter for manufacturing, and we'll post a services PMI breakdown next week. So watch out for that. And then breadth and quality, right? So we have the lagging factors in the U.S. market being breadth and quality. Everything is riding on momentum and speculative growth. So if you see the breadth and quality factors start to break out, and we cover these every week in the newsletter, then it does mean that the market is rotating as it should. If there is no rotation in due time, then we could see a further drawdown past a correction and maybe into a bear market. What could save us from the bear market is a timely and slow-paced rotation into the breadth, into quality, into smaller cap names, away from the speculative growth and momentum seen in AI. And that said, this is all from me today, guys. I'll be posting more stuff about the Korea trade and the potential software rotation and other high-quality signals that I'm watching out for in the market this week in my newsletter. Consider subscribing to it. I'll link it down below. And keep in mind, prices for premium are going up on July 17th, which is expiration day. So the current prices, $59.99 a month, expire in July 17th. They'll go up by 5 times or so, just based on demand that's coming in, guys. So consider that. Hope to see you on the other side, and have a great 4th of July weekend. Catch you in the next one.